Good morning, SMF Street Traders. We've had that 1, 2, 3, 4 day short cover rally. When we didn't break the 1040 on Monday, we started going long the bull funds, and how right we were. And we started buying up and out of the money calls on lots of different things. So we were short August. We made a bottom. We've had a 4-day rally. That's the daily chart. 100-day movement average has crossed over the 200. That's bearish. We are trade bound. We are range bound 1102. I've got to close 1102 on the S&P to come back up here. But let me tell you something. The last top where we shorted up here, and we have the live videos on our site, that's when we went short all the way down. What a big fat trade on those put options. Now we've re-levered back up. Here's half of that daily bar at 1102. I got to close above it. But what SMF Street Traders need to remember is on Saturday, we're going to take a look at why the put market was overvalued and why we bought the call side of the market for the bounce. And I will be doing the Dow, and then we'll be doing the bear and the bull charts together so that you can see that four-day short cover move. Now, when we look at this on a weekly level on the SPX, because we're range bound, we're in a professional traders market. There's the top that we sold short. Then on the weekly, we have been below the 10-week moving average. 1, 2, this is the third week. In order to qualify for a full bear trend, you have to be below that blue line. That's the 10-week moving average, and it has to go down, but you need to close below it 4 weeks in a row. We never quite made that. However, it was a bear trade and a bull trade. The bear trade reversal that we did up here at the top of that failure worked nice down to this double bottom right here on the weekly. So basically, in a professional traders market, I'm back above the 10-week. However, as I've said always on the weekly, is that trend line right there. Until I've got 1101 close above there, just like I showed here on the daily. There's that 11286 there. That's the 100-week, but 100-day moving average there. The thing about it is that the bull trade came into play when the bear didn't want to break this price support level. As I've always said, there's a time to be both bear and bull. To now, in this 5-day trading range, was the bear stopped going down, the bull got a retracement, but I'm still halfway below the bar. We'll be doing a lot of work. Technically, the light volume players are coming back on Tuesday. We're in a professional trading range. Until I get a close above 1128 on the S&P, then I'm going to remain a short seller in the range-bound markets. That's not going to be easy for an investor trader, but it damn sure is easy for us here. And basically, there's half of that bar. Here's half of this weekly bar. That's 1153 on the S&P. Well, here, 1150. So right there, when we had that reversal, 1153, all the way down here to the low end of that double price, that was a 1027. This move here comes off of that 1047 handle. Didn't want to break that 1050 on a closing basis. Therefore, we have a bull short cover low volume rally, and SMF Street Traders, as you being masters of both bull side markets and bear side markets, and understanding that when the retail trader or investor wants to come in, well, that's the time that we really get aggressively short and take the other side of the public. Right now, during this 5-day week, there isn't enough there to do that. Another thing about it is underperforming asset managers, whether they want to come in and try to buy this and get this above there, is yet to be determined. People have been underperforming the S&P going into September for the last 3 or 4 years. So it's going to be what they want to do when they come back, and are they going to try to chase performance? That's the S&P 500, both bear and bull.